So today we're going to talk about a pretty wild new business model. It's this mashup of AI trading and something called a proprietary trading firm. Some people are even calling it prop farming. Let's get into it.
You know the dream, right? The whole idea that trading is your ticket to financial freedom? Well, that dream usually hits a brick wall, and it hits it hard. The sources we're digging into today say that a whopping 93% of people who try to get funded by these prop firms, they fail. So, with odds like that, how could anyone possibly think they have a shot?
So here's how we're going to break this down. First, we'll look at the trading dilemma itself. Then, the opportunity that prop firms present. After that, the AI-powered solution that's being offered. We'll run the numbers on prop farming, and finally, cover the risks, the costs, and the big question at the heart of all this.
Okay, so first up, let's really unpack that 93% failure rate. I mean, why is being a profitable trader so incredibly hard? Well, according to our sources, it really just boils down to two very human problems. First off, you've got emotion. Oh man, if you've ever placed a trade, you know this feeling. It's the fear that makes you sell way too early or that greed that makes you hang on for way too long. Those gut feelings, they can absolutely wreck a trading account. And second, the markets are always changing. A strategy that was printing money last month could be totally useless today. But most traders, they just stick with what they know, right until it's way too late.
So failure is so common, why would you even bother? Well, this is where proprietary trading firms, or prop firms, come into the picture. They offer something that investors just love. It's called an asymmetric bet, which is basically a fancy way of saying a shot at a huge reward for a pretty small and fixed risk.
So what is a prop firm? Well, think of it as a company with really deep pockets. They're looking for talented traders, and they'll give them access to a ton of capital to trade with. Now, to get that access, you have to pass a test. They call it a challenge to prove you know what you're doing. If you pass, you get to trade their money, and you split whatever profits you make.
As one of the co-founders of the system we're looking at puts it, this whole setup is the holy grail of investing. It's this core idea: risk a little for a shot at something way bigger. Let's see what that looks like in practice.
And here is that asymmetry, plain and simple. On one side, your entire risk is the challenge fee, maybe around $500. If you fail, that's all you're out. But if you pass, your reward is control of a $100,000 account. And get this, you're not on the hook for any of the trading losses, but you get to keep up to 80% of the profits. See the tilt?
So, this brings us right to the heart of the business model. If human emotions and outdated strategies are the big reasons people fail these challenges, well, what if you could just take the human out of the equation? And that, right there, is where the AI steps in.
To explain how their system works, the creators use an analogy that I think we can all wrap our heads around: Tesla's autopilot.
Think about it. A human driver can get road rage, get distracted, get tired. Kind of like a human trader can get greedy or scared, right? But the AI, just like autopilot, it just follows the rules. No emotion. A human trader relies on their own, limited experience. But the AI, it's like Tesla's network. It learns from the collective data of every single user. And here's the kicker. A human usually has a fixed strategy, but the AI is built to constantly adapt to whatever is working right now.
They actually call this the hive mind AI. So the claim is that it's constantly gathering data from its whole community, and it's tracking over 500,000 different trading strategies in real time. Then, its whole job is to figure out which of those strategies are the most effective for passing these prop firm challenges in the current market, and it automatically deploys them. The whole point is to take the guesswork out of it.
Okay, so the theory sounds pretty compelling. Removing human error, adapting to the market, it makes sense. But does the math actually work? Let's get into the numbers and see how this all stacks up as a business strategy. So this right here is the system's big headline claim. While the average pass rate for these challenges across the industry is a pretty dismal 7%, they say their internal data shows their users are passing over 26% of the time. That means you're nearly 4 times more likely to succeed than the average person trying to do this manually.
So what does that actually mean in terms of dollars and cents? Well, a 26% pass rate means that, on average, you succeed once every 4 tries. So if each one of those tries cost you about $500, your average cost to get one of these funded accounts is $2,000.
Okay, but what's that funded account actually worth? Well, after looking at data from thousands of user accounts, the company came up with what they call an expected value.
This isn't a guarantee, it's the average profit they project a person will make from a single $100,000 funded account, and that number comes out to about $4,800. And when you put those two numbers together, you get the absolute core of the prop farming pitch. The idea is that you spend, on average, $2,000 in challenge fees to get an asset that's expected to pay you back $4,800. That's a claimed potential return on investment of 140%.
Now, 140% ROI. That sounds almost too good to be true, doesn't it? And that, of course, brings us to the really important part: the risks, the costs, and any guarantees.
Let's be super clear about this number. A 26% success rate also means there's a 74% failure rate, so on any single attempt, failing is still the most likely outcome. You are going to lose some of those challenge fees along the way. That's just part of the math.
So to deal with that, the system apparently has a safety net they call the hedge bot. You can kind of think of it like an insurance policy. In the event that a challenge has failed, this other bot is supposed to kick in and try to recover up to 75% of that lost fee. The whole idea is to soften the financial sting of those failures that are bound to happen.
Of course, getting access to a system like this isn't free. The sources we looked at say the price tag is somewhere between $6,000 and $12,000, although they do have financing options. But, and this is a big but, they do back it with a guarantee. If the system doesn't manage to help you get at least one $100,000 funded account, they offer your money back.
Which, leaves us with $1 million question here. Is this a genuine, data-driven revolution that's finally cracked the code on trading, making access to big capital something anyone can get? Or is it just a really sophisticated, high-tech way of repackaging that same old dream of getting rich quick? The truth, as it usually is probably somewhere in the middle.